Manish, hi, morning. Exactly a month back, 17th May, when we were chatting, you were saying that PSUs are going to get massively re-rated after the election outcome overhang is done away with. Do you think it's going to be a lot more selective, though, and not such a blanket PSU call, which has been the case and held out very true for almost, last 2 years, if not year and a half?
No, I don't think so. I think it's a reiteration of the fact that there is wealth that is going to get created in the PSU space over the medium to long term. I think it goes without saying that obviously market rewards growth, and obviously the margin of safety is there when multiples are lower. So I think given where valuations of the private sector units are, the capex continuity, particularly in railways, defense, power, uh, you know, the private counterparts are actually trading at significantly higher valuations. And when you have a situation when the internal machinery in the PSUs is being geared up for growth and creation of market cap and rewarding shareholders and all stakeholders, I think there is a case for a re-rating in the PSU space, even from these levels. Because when you have a growth and valuations and dividend yield comfort, I mean that's the best recipe for value investing, isn't it? And that's what PSUs as a whole are presenting today before you. So I would think that PSUs will continue to create wealth for investors even now.
But Manish, PSUs ex banks is a very, very large umbrella that we are talking about. Where is it that you see both the growth runway as well as somewhat of a valuation comfort?
So you talk about the power sector as a whole, the monopolies. You have significant monopolies. The power financiers. You come to the logistics space, the largest container company in India moving through rail. You have oil marketing companies where fuel demand is not going to peak before 2030 in terms of volumes. Gross refining margins are pretty good, and marketing margins are also elevated. For the last 2 years, we haven't seen any price increase. And these companies still today are available at 6 to 7% dividend yield. I mean, 4 to 5 prices to earning multiples. So I would believe that monopolistic organizations, we talk about defense, you have the three largest companies when the government is focusing on indigenization, Atmanirbhar, you have a long runway for growth for the next 5, 7 years, 10 years. Because the export story also out here is just starting. So I think monopolistic organizations in the PSU space offers you growth at very, very reasonable valuations and very good dividend. I mean,
if you like this video, then like, share and subscribe to ET Now.